Welcome to another day in the Matrix, waters above crypto. We're getting a little red pill this Monday in the crypto market. So today we're going to be going over the Bitcoin and XRP charts and scanning over some different indicators to help us navigate what's to come in the short term for this crypto market. Over the weekend, I released Red Pill episode number 15 for the Patreon supporters of the Mastermind community. We went over Constellation, DAG, Sia Coin, Atom, Polkadot, and a couple others, and in a couple days I'll be releasing the second decode for our Gematria Masterclass on HBAR, Hedera Hashgraph. Really excited to share all those juicy numbers with the Mastermind community members. So if you're new here, we do cryptocurrency technical analysis and combine it with Gematria, Numerology, and Astrology to understand these markets. Feel free to subscribe, turn on the bell notification to stay updated on when new videos come out. And make sure to give this video a like and share this channel with other conscious people to help grow this community. And for those of you that want to learn how to do technical analysis and combine it with Gematria, you can join my Mastermind course. My email's in the description box to get in contact with me for access to the course. And with that being said, let's take the red pill. So, first things first, we're just going to keep on track with this dollar currency index, the US dollar, and how it's been chopping around really extremely lately, some big volatility. But overall, we still see this rejection off of this white trend line, going back 290 days plus, all the way back to 4.5 years, going and starting back in the winter of 2016. And it has been a confirmed resistance ever since about September of last year, ironically around the Hebrew New Year. So what we're seeing here is another rejection, and typically it does take a little bit of time for resolution. As I said in my video previously, I want to see a daily close for the DXY below 91.94, and if we get that, we could continue to the downside. So another thing is the stock market pretty much all put on new highs today. US 30, S&P, and the NASDAQ all hit new highs. So we've been seeing this a lot lately, actually, where the market as a whole is still hitting new highs while crypto is getting a lot of pressure. You could see there's a lot of red in these cryptos today. So let's just go over the most important thing, which was the arc resistance that we've been talking about for a long time here. I call it the firmament dome, and it's this dome that's been going on all the way back since October 7th, and we're looking at about 280 days of resistance. So we're coming up on we were a full year almost trading within that range. And the one thing that we've seen actually is a weekly close outside of this range. And today we've seen about 2 to 3 full trading days of resolution outside of it. And I believe that it's about time to delete this blue trend line, because it's becoming insignificant and it will clear up our charts as a whole. Wanted to do that live during the video so you guys can see how we're adjusting these charts as we go, as needed. Another thing that we're noticing is this white downsloping resistance is continuing to be a battle zone. So it's been a resistance in the beginning of the year, and then it started to flip as support for a short period of time. But ever since the breakdown in the end of May, we've been treating it as a noticeable resistance. We had one little peak out over here. Again, that was around a new moon, and that's typically the kind of stuff you see around a new moon, just manipulation. The same thing on full moons. You see massive liquidity enter just randomly. Like you could see right here on the 13th of June, it was a 10% candle for Bitcoin. It's big. So we actually did just pass a new moon on the 9th a couple days ago, and that awkwardly led into the weekend. And I was telling my supporters, like, hey guys, I don't really like to see Saturday or Sunday pumps, because the CME opening on the following Sunday night near the weekly close will typically bring the prices back down. That was 100% accurate as to what we're seeing today. All those gaps, which I don't like talking about CME gaps too much, but they do work out for these smaller plays. Anyways, for the most part, that gap did get filled on the CME chart. Again, if you're not aware of CME, it's the Chicago Mercantile Exchange, and they're trading Bitcoin and Yep, they're a big player, much bigger than retail is, so they're not playing with chump change. And that's kind of why paying attention to them might help you a little better in understanding where market direction will go in the short term. So anyways, we did see a little bit of green over the weekend, and then we got that pullback into last night and today. And this is kind of just chopping sideways. And that's kind of the theme of today's video. I want to talk a little bit about this lack of volatility and how we've started to move into this noticeable sideways consolidation range. And we are actually putting in continuous higher lows, which is bearish. This market seems bearish across the board, and not only is it bearish, but it is also boring. And those two things combined are where retail will leave in droves. And that's what we want, actually. We want the average retail investor to go away because they're the ones that speculate with leverage trading without having any skills of trading, and they're the people that typically FOMO into nonsense projects that have no utility and no use case. And it makes this market a little bit hectic for us, the people who are trying to actually be part of the great wealth transfer and trying to be patient during this time. You need to look into the eyes of retail and the eyes of the institutional player, the eyes of somebody who doesn't have the money to lose, and the eyes of somebody who has way more than enough money to lose. Somebody who could barely afford a 2000 Honda Civic versus somebody who could own multiple yachts. Now, these are very extreme situations, but the thing is the liquidity could be different in the numbers. If you can get 1 billion people to all FOMO in with $1 into Dogecoin, it could go up very high very fast. So this is what people need to know. We have the power in numbers, but we typically lose because the masses are unconscious, sleeping. They're the walking dead. Now, because of that, we need to be able to sympathize with them sometimes and be able to just deal with it. And that's part of being in the team of enlightenment, let's just say. So let's just do a rundown of everything without these drawing tools. And I think this will bring a lot of interesting things to discuss here. So for one, we have this moment back here, people calling this a big head and shoulders. I said that's baloney. You don't have, this isn't a head. This is multiple crown tops. This isn't really this could be a left shoulder, but this is not a right shoulder. This looks awkward. It would have been a breakdown right here, but given that that's support around 30K is so strong, I'm not really too concerned. But anyways, for the most part, let's look at what we are seeing. And one is we're still bullish on MACD on the daily. Let's actually just keep this up and look at the 2-day. And we are bullish on the 2-day, a really nice slope to the upside. And then the 3-day, which we actually had close yesterday, is bullish. Now, this is the first bullish 3-day cross we've had in quite a while. This one doesn't even count, actually. Pretty much back into the fall time of last year. Now you're going to see this keep coming up, where remember back in May, I was telling you guys when we broke down, expect that like last year sort of like summertime into fall time to be similar to what we see now. And that's actually playing out in a lot of the technicals as well. So it's nice to see that. We're in this crash that we saw of liquidity was very similar to the C-word crash, where all the markets tanked in March of last year. And now we're starting to see sort of a similar recovery, but we're not getting that V shape. And the reason we're not getting that V shape is because we're sitting at highs right now, as opposed to the crash of the C-word crash. It came down to lows, really low, $3,800 Bitcoin after it was already at like 12K. So we started the rally at 12K and we're currently at 33K. So you kind of understand there's a difference there. There's a lot more liquidity in Bitcoin today and in all the cryptos across the board. So with that being said, this 3-day bullish cross doesn't mean we're going to immediately see bullish price action. Every time you get these macro crosses, they are lagging indicators, of course, and that means we have to be patient. But I'm going to go through a couple other things that are a little bit interesting. So I'm going to go back to the daily. And I'm going to load up the Bollinger Bands. So you guys don't hear me talk about these too much, but I do think there's something to be said here where the Bollinger Bands are starting to constrict. If I zoom out, you can see they're getting extremely tight in this area, and that is very similar back to September of last year. And you could see that it was also similar back into the summertime. They got really constricted back in July. Now we're in July. Where I'm pointing at right here is very similar, actually, where we have this sideways consolidation, and we are anticipating somewhat of a relief rally. And I'm kind of excited to see how this goes because we're towing the line right now. Like, we're across the board for all cryptos, kind of like on the tipping point of down or up. And when it goes down or up, it's going to be volatile. Now, is that to be said that we could have a fake out to the downside and then a huge pump to the upside? Absolutely. That happens all the time in cryptocurrency. It happened right back here, where if I hide all the indicators, you can see we had this big fake out, and it doesn't look like it was a lot, but it was actually about 20%. And then it came back up and then faked out a second time with a W breakout that had a massive move to the upside. It happens all the time in crypto. This move was actually really interesting too, where we had a breakdown, recovery, breakdown again, made a new higher high, and then still went on like a 100 days of sideways. So this is kind of crypto. It's all governed by astrology, numerology, and gematria. And what we need to have is patience during times like this. That's pretty much what today's video is all about. So I do want to talk about an indicator that I haven't talked about on this channel, and it's called the Bollinger Band's width indicator. So it's actually measuring the distance between the top side Bollinger Band and the bottom side. And let me hide the drawing so this is a little bit clearer. Now what we're seeing is actually a 12 read. So you can look up here to see the number, and if you pause the video, it's at 0.12. This is the lowest it's been actually since when? Since the fall time of last year. So back in that September, October range. And the one thing that is to be said is when this drops below 10, so 0.10, when this drops below 0.10, that's when really big volatility comes in. So we're sitting at 12. If we close today about 34,000, 33.5 or something like that, and keep closing at these very like lackluster sideways prices, this will continue to drop down. As this drops down and the Bollinger Bands constrict, you could anticipate a bigger move coming. Excuse me. And that's exactly what I'm seeing at play here. Something very similar to back in September, October, that range of Bitcoin's price action a year ago. So we are kind of in this June, July phase of last year. Let me show you where it was right here. Very sideways, very boring. If you take just screen cap this and then you screen cap this, you can see similarities. And this lack of volatility can also be brought up in the volume. So if I bring up the volume, you're going to see like we are at rock bottom volume levels, like some of the lowest volume we've seen consecutively in quite a bit at these lower price levels. So when Bitcoin was trading at these lower price levels back in January, we had much higher volume, doubled or tripled the amount of volume. But one thing that I might think might be interesting is going to the weekly chart and bringing up the volume. So I'm going to scrunch this up a little bit. I'm going to zoom in. And this is since the C-word crash a year ago. Now I'm going to put my cursor on average around to where this structure is. And then you could just pause the video. And if you look to the left of the screen back in July and October, you can see that we are about at the similarity of lacking volatility as back in the summertime of 2020 and the fall time of September, October, leading into that parabolic move to the upside. So this is another thing that tells us that this is becoming boring. And when it gets boring, it gets exciting. And this is something that needs to be said, right? Because a lot of retail, they only want to be involved when it's exciting. And that's why they keep getting the rug pulled out of them. They wait till the top to get involved, even though they might have known about it when it was boring and sideways at the bottom. So what I'm seeing here is something that we could be just reliving a fractal pattern, actually, where we're going to be trading sideways into the end of July, start of August, into the August new moon. And we might actually get a like premature pump up and then come right back down into the Shemitah starting in September 7th, have a little more sideways and then continuation. That's in the cards. That would also make a lot of sense. There's way less liquidity in this market right now, and that is obvious in the volume. So when we look at this from a daily perspective and we want to know resolution, bullish resolution is anything of a daily close above 36,000, and bearish bias would be anything below 31K on a daily close. Again, that's not my opinion. That's just what we're seeing in the charts. So all fake outs should be expected in the matrix. We are in a very manipulated time right now, and we've been showing you that with the Gematria on every single video we make. So quickly, before we move into the XRP charts, you guys can go ahead, give this video a like, try to get this up to 600 likes, and subscribe if you're new here and you like what we're doing. So let's go over to XRP. We've got a couple things going on. XRP is kind of in the similar pattern to Bitcoin, where it is very sideways, very boring. I'm going to turn off the volume. And the one thing here that we could go through is the MACD on the daily is on the upswing, and this 2-day cross. Now, I was talking to the Mastermind community Discord about this 2-day cross and how it was something that we were looking forward to. We've actually gotten it, and now that we've gotten this 2-day cross, we need to be a little patient, because every time we get a two-day MACD bullish cross in XRP, it takes about 14 to 20 days to get resolution. So I'm going to show you a couple examples. So let's go back to this time frame right here around March 22nd, and this was when we got a MACD cross. So I'm going to go from the middle of the candle up until top. It took us about 22 days. That was a very big move. That was 260% to the upside. Now let's go back a little further. So we're about 26 cents right here on January 27th. We get a MACD bullish cross. And if we measure out from then until we got top, we're looking at about 16 days, 140% to the upside. Let's go to another example where we have November 6th. Right here, we got a 2-day MACD bullish cross, and we see that we hit top 18 days later, 200% to the upside. We could keep doing this over and over again. This is a solid indicator for XRP. Right here, we have our 2-day MACD bullish cross. We did get a little cup and handle after it on the short-term time frame, but all in all, we can see got 26 days later, we're looking at about a 60% pump, and that was happening during the summertime of last year, which is the same exact time frame as today, guys. July 7th, we're sitting at July 12th. It's not a big difference. So we still could bowl out and move to the upside, but because we're so flat, we just have to see what Bitcoin does, of course. Now, what this is telling us is that that puts us around the 14-day time frame as early as we're looking at around the end of the month. And if we were to be a little bit more conservative and go like 24, 26 days out, we're looking at about August 7th. Now that is around the next new moon. Again, new moons and full moons play out better with Bitcoin than other things because Bitcoin's the liquidity in the space. It's a much larger asset, similar to like the S&P or Dow Jones for the tech stocks and etc., like the NASDAQ is to the tech stocks. But anyways, that's just a side note. The more important thing here is that if we're looking at about 24 to 26 days out and about 150% to the upside, we're looking to essentially re-enter the previous trading highs before the end of August, and that's on average from whenever we get a MACD bullish cross on the 2-day chart. Now, is that my opinion? Again, no, it is not my opinion. It is what we see in XRP's price action every time this indicator flashes. So that's important for us to know. Now, another thing we can see is on the daily chart, we're getting the Bollinger Band's width sitting around, let me show you the number. It's sitting around 16. Now, whenever this goes below 15 for the altcoins, it's almost like when Bitcoin goes below 10. So, of course, altcoins are much more volatile. So when the Bollinger Band's width goes below 0.15, that is indicative of a big move coming for an altcoin. So this market is extremely boring right now. It is really, really boring people out. And for anyone who's bullish right now and everyone who's watching this video, this is a very good thing because I personally buy when retail is scared and when everyone is bored. And I sell during the excitement, so I always win. And that's the big lesson here is that during this big, long, boring consolidation phase, we need to be okay with what we're seeing. And if you're not buying right now, don't look at a chart, period. It's very simple. If you don't have the liquidity to buy, but you're already in this market and maybe you bought at top, then you probably need to steer clear from the charts or you need to focus on educating yourself. It's either or. But if you're somebody who has a cash flow business or you're working and you want to be a part of this wealth transfer, you need to understand that you don't want to wait for when retail is happy and excited and everyone's FOMOing in. You need to take these opportunities seriously because this is where the money's made. It's made during the boring, sideways, scary times. So That's the lesson of today. For XRP, bullish resolutions coming in around a daily close above 72 cents, and then bearish bias would be closures below 60 cents to the downside. So anyone who's excited about the rest of this boring week, continue to stick around. There's going to be plenty of new indicators that I talk about as we're in this boring phase to kind of help people out here. And if you're interested in learning technical analysis and combining with Gematria, you can join my Mastermind course and the Patreon Mastermind community memberships. Next Gematria Masterclass for H-bar Hedera Hashgraph will be coming in 2 to 3 days. I'm really excited to launch that because that is one of my favorite esoteric cryptos. I've been having a blast studying that crypto and decoding it. And also, merch will be coming soon. We have some t-shirts coming out, some tank tops, shirts for the ladies, and also some long sleeve shirts for my peeps over there in Australia and New Zealand where it's cold out. I love me some long sleeve shirts. Enjoy the rest of your day in the Matrix. Much love.